Well, regular Insight viewers recognize her right away as a valuable resource in planning and sustaining your retirement. She's Heather Foster, investment advisor and fiduciary. Today we want to talk about tax deadlines because the only tax deadline is not April 15th, is it?
It is not.
No.
Obviously, corporations have different tax deadlines, but the main one I wanted to mention today are for individual people who've put their extensions on place, right? So the extension deadline is the 15th of this month, just a few days away. So if you put your tax return on extension, don't forget to finish that filing because time's up, right? So procrastinators or a lot of people who don't get all their 1099s or K1s by the 15th of April have to do extensions, or maybe if there was something that you're waiting on from a company, you have to put yours on extension. So just make sure you get those things wrapped up because that deadline is fast approaching, just a few days away. So make sure you do your planning. And I also just wanted to mention, since it is getting that time where we're finishing up 2017's taxes, right? So people are going, man, that should have been done a long time ago. But it's just a reminder out there of the other types of deadlines we have on the 15th of this month, so just a few days away. Just if you are by chance a self-employed person or you have a SEP program, you are still eligible to contribute into that up till the 15th of this month. So make sure you have your tax professional run the numbers to see how much you're eligible to contribute. But that deadline did not expire on the 15th of April. What deadlines do expire by the end of this year are things like required minimum distributions. Just a quick reminder, in October of every year, I like to go through all my clients' accounts, those that are over 70.5. Just make sure everything's been taken care of. It's best to not wait till the last minute.
Yes.
Because if you wait to the last minute and you send in your forms in December or maybe the middle of December, there's no guarantee that those things will get processed by the end of the year. Required minimum distributions have a 50% penalty on them if you do not take out what you are supposed to take out. So make sure you take those out. The other thing for people over 70.5, if you're giving to any non-for-profits, you can give it from your IRA, which is a huge tax savings, especially with the changes that we have seen in 2018. Right. So if you used to be somebody that would write your checks to your non-for-profits and you're over the age of 70.5, more than likely most people will be now using the standard deduction, because Trump, when he changed the taxes, he said, okay, we're going to take away your exemptions and instead we're basically going to double the standard deduction. So most people, even if you used to itemize in 2017 and all the years past, you may now be a standard deductioner. If you're going to be a standard deduction person, it doesn't benefit you to necessarily give to those non-for-profits because you won't be able to take them off on your tax return because you're going to be using the standard deduction anyways. So it is a huge tax savings instead to start giving those non-for-profits IRA money. It's a way of getting the IRA money out of the IRA tax-free. Plus it counts towards your required minimum distribution. Again, don't wait till last minute. I think my one investor, the one that I say you get the award here, he's got 30 different non-for-profits that we give to, 30 different distribution forms. So we start working on those distributions obviously earlier in the year so that we're not trying to process 30 forms all at once in December. So that is a big one to make sure you get out by the end of the year. Also, just making sure that you're on track for your 401k contributions. Those deadlines are also the end of this year as well. So maybe sit down, do a plan, talk to your accountant maybe after the 15th of this month when they're not so busy.
Give them a few days to get through this.
Yes. And just make sure that you're on the right track. Make sure that, you know, again, if you've got more eligibility to contribute to your 401ks, ask and see if your company has a Roth 401k. Again, something that's missed a lot. There are pre-tax 401ks. There are also Roth 401ks. And most employers now are offering both. So maybe you come up with a tax strategy before the end of the year to make sure you're contributing the right way. And the most important thing of this whole conversation is make sure your financial planner is talking to the accountants or the CPAs that you're working with to make sure that the planning that is being done is the most tax efficient planning one can do. It's not just about calculating your taxes and it's not just about your investment returns. It's about mirroring those two together to get the best return possible.
You've got to maximize that. And you mentioned it, I thought when you first started saying, it was like, I got to make sure and ask her, because all of those, there were so many changes to the tax policy.
There was a lot.
There's a lot changing. When you go to file next year's taxes, there'll be a lot of differences. So you need to speak to your tax professional about
prior to the end of this year. So that way, again, you're not missing out. Because if you wait till next year, you learn about the changes, it's too late for a lot of things. So make sure you're talking to those professionals prior to the end of this year so that some strategizing can be done and get your professionals talking.
Yes, please, because you want to make sure you get to keep as much of your money as you can.
Yes.
That's what we all want. If you want Heather to help you with that, or anyone at Foster Financial, just give them a call. Make sure you mention Insight when you call them, because you will get a free gift and you can get a free consultation with them. Give them a call today, 234-2200, or look at them on the internet, fosterfinancial.net. We'll be right back.